So Brian, I've heard about these 1031 exchanges. Can you give me a little more detail about what they really are?
Yeah, Section 1031 exchange, that's the IRS code section. And it's been around in the tax code for over 100 years. But it's the code section that allows somebody to sell their property and reinvest into other real estate without paying the income tax. Now they call it a tax deferred exchange, and they have the word exchange in there, but it's not really an exchange. You're not trading one property, your property for Bill's property across the valley. You actually can sell your property and buy pretty much any kind of investment real estate under the strict guidelines of this code section and defer or eliminate the income tax.
So Brian, who is this strategy best used for?
Well, first you have to own investment real estate, and most people that own investment real estate over the years have seen the values go way up, or conversely, maybe they bought it and they've owned it a long time and they've been taking depreciation deductions on it for years and years, so it really has no cost basis. So when they sell it, pretty much all that they receive is going to be subject to income tax. And another reason somebody consider a Section 1031 exchange is they just think it's the right time to sell their property, but they like real estate and they want to continue to be in real estate. They like the income from it, the rents and so forth, but they don't like paying the income tax.
So Brian, it seems like there are a lot of advantages to the 1031 exchange, but what are some of the disadvantages? Why would someone not want to use a 1031 exchange?
Yeah, there are some complexities. You have to hire what's called a qualified intermediary. You have to do that. They cost about $1,500 on average to do those. There is, again, like I said, more complexities to doing this. You have to also find a replacement property within 45 days of selling your property. Now, in today's real estate environment, that can be kind of a challenge. A lot of people think, well, I'm going to sell my property and I'll find another property. And they look around and there's 20 people offering on properties, and guess what? You can't find one. You have 45 days. So a lot of people have found challenges if they want to continue to be an active landlord, though we will talk in other videos about Delaware statutory trusts where you can find a property within 45 days easily.
So Brian, I talked about the benefits. Can you expand a little bit more about the plus side, the benefits of doing a 1031 exchange?
Yeah, like I say, you don't have to pay the income tax on the sale. If you sell a property for $1 million, say, and you exchange it and buy at least $1 million of a replacement property, you don't pay the income tax. If you only bought $900,000 of replacement property, you'd pay tax on $100,000. So it allows you to defer the gains on that. A lot of people, again, I mentioned with 1031 exchanges, they want to have different real estate in their portfolio, or they don't want to be an active landlord. So we can use 1031s in this case. But those are the main advantages. It's for people that are ready to sell their real estate, but like the attributes of owning real estate. They just want different real estate. They like, again, the rental income. I pretty much haven't met anybody that likes paying income taxes, so it does defer or eliminate that with a step up in basis someday.
Brian, can you give me an example or story of someone who has used a 1031 exchange?
Yeah, let's say, for instance, you've got a property worth $1 million and you decide to do an exchange and you want to sell out of your Seattle duplex and you want to buy in Texas and Florida, and maybe you've found two houses, rental houses down there, each for $500,000, or maybe that'd be four down there because they're a lot cheaper there. You could sell your property and then reinvest in other houses, but you may find that those houses really aren't available because you couldn't close on it too hot of a real estate market. Maybe you closed on one for $500,000, and the other $500,000 you found a Delaware statutory trust and were able to replace the $1 million from your 1031 exchange.
Good information, Brian. Sounds like a great strategy. Thanks.